Get ready for the action, because we are kicking things off with massive retail momentum. Amazon just dropped some incredible first-quarter results revealing that consumers are finally spending money again, fueling massive growth. We are looking at Amazon's impressive e-commerce unit sales, which grew by 15% year-over-year, marking the highest growth since the end of the pandemic. This signals a real shift in consumer behavior, and we dive into what this means for the entire market.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we are looking at Walmart and how they are capitalizing on these shifting consumer trends. Walmart is positioned perfectly to benefit from improving spending, with their e-commerce sales surging a huge 24% year-over-year in the last fiscal quarter. We will break down how Walmart's strategy, including investments in AI like the Sparky shopping assistant, is driving customer engagement and setting them up for significant earnings growth. Now, let's turn to the value powerhouse, TJX companies. This leading off-price retailer is proving its resilience, continuing to expand its global off-price model despite inflation hitting wallets. TJX has reported sales growth every year, except for 1 year in 2 decades, and we are examining the outstanding inventory availability that is keeping those sales strong, while also watching their expansion into international markets. And finally, prepare for a massive showdown as GameStop makes a colossal bid to challenge the giant. GameStop announced an unsolicited, non-binding offer to acquire eBay for a staggering $555 billion. We look at what GameStop chief executive Ryan Cohen is saying about turning eBay into something worth hundreds of billions, and whether this transformative move will actually succeed in the fiercely competitive e-commerce landscape. Stay with us. Amazon's first quarter results signal a resurgence in consumer spending, driven by potential tax relief, as e-commerce continues to show strong momentum. The company reported a 15% year-over-year growth in e-commerce unit sales in the first quarter, marking the highest growth since the end of the pandemic. In the broader retail sector, other major players are also demonstrating robust performance. Walmart is positioned to capitalize on improving consumer spending trends, leveraging its everyday low prices strategy. The company is expected to report fiscal first-quarter earnings on May 21, with sales projected to grow 5% year-over-year to $172 billion, largely supported by existing stores. Notably, Walmart's e-commerce sales surged 24% year-over-year in the fiscal fourth quarter, significantly outpacing Amazon's growth rates. Walmart is also benefiting from investments in artificial intelligence, such as the Sparky shopping assistant, which has shown strong customer engagement, with users spending approximately 35% more per order. High-margin opportunities from memberships like Walmart Plus and advertising are key areas to monitor in upcoming reports. TJX Companies, the leading off-price retailer, continues to expand its global model. The company has maintained sales growth every year over the past 2 decades, with comparable store sales growing 5% year-over-year in the fiscal fourth quarter. While analysts anticipate a 6.5% year-over-year sales increase to $13.9 billion, earnings growth is expected to be 8.7% to $1. Management highlighted the continued availability of quality inventory as a key driver for near-term sales, while focusing on international growth in Europe, Mexico, and the Middle East. These results underscore a shifting consumer landscape where value and digital convenience are paramount. While Amazon shows strong e-commerce traction, Walmart is demonstrating superior growth in that segment, and TJX exhibits resilience across various economic conditions. Investors are closely watching these retail giants as they navigate evolving consumer behavior and technological integration. Amazon Web Services CEO Matt Garman has made a significant statement regarding the future of software, describing it as a huge The exact nature of this description is highlighted in a recent report by the Times of India. This comment comes amidst ongoing discussions and debates about the state and trajectory of software development in the industry. The report also features an introduction to the TOI Tech Desk, a dedicated journalistic unit focused on delivering timely and relevant technology news. The TOI Tech Desk covers a broad spectrum of the tech landscape, including gadget launches, in-depth reviews, emerging trends, exclusive reports, and breaking stories across critical areas such as artificial intelligence, cybersecurity, personal gadgets, and major platforms like WhatsApp, Instagram, and Facebook. The desk emphasizes accuracy and authenticity in its reporting, ensuring readers receive the latest happenings in the digital universe. Amazon is offering significant discounts on a selection of LEGO Star Wars sets in anticipation of the upcoming May the 4th holiday. The deals feature substantial reductions, with many sets marked down by 20%, presented as a favorable opportunity given recent slower sales in the Star Wars category. Several highly sought-after sets are included in the promotion, such as the Dark Falcon, set 75,389, Jango Fett Starship, set 75,433, and the ARC 170 Starfighter, set 75,402. Additional, deeper discounts have been announced for other items, including the Battle Droid with Stap, set 75,428, which is currently 40% off. Furthermore, the Coruscant Guard Gunship, set 75,354, and the Ghost and Phantom II, set 75,357, are both available at 30% off. These promotions highlight a renewed focus on the Star Wars collectible market through major online retailers. Meme stock GameStop has launched a massive, unsolicited bid to acquire eBay, aiming to position the e-commerce giant as a formidable competitor to Amazon. The video game retailer announced a non-binding offer to purchase eBay for $125 per share in a cash-and-stock arrangement, valuing the platform at approximately $55.5 billion. This represents a 20% premium over eBay's Friday closing price of $104.07, and a significant 46% premium over the price when GameStop initially built its stake in the company. Following the announcement, eBay shares surged by as much as 13.4% in after-hours trading around $118, signaling investor skepticism regarding the deal's finalization. GameStop, which gained notoriety as a meme stock during a 2021 retail frenzy, saw its shares rise around 4% to $27.06 per share. The move comes as GameStop CEO Ryan Cohen has publicly expressed a vision to transform eBay into a multi-hundred-billion-dollar entity capable of challenging Amazon. Cohen stated that eBay should be worth significantly more and is planning to pursue a transformational acquisition. GameStop has secured a roughly 5% stake in eBay and has obtained a commitment letter from TD Bank for up to $20 billion in debt financing. The remaining portion of the acquisition is slated to be funded by GameStop's approximately $9.4 billion cash reserves. The proposal is contingent upon approval from eBay's board of directors, regulators, and shareholders from both entities. Questions remain regarding the feasibility of the bid, given that GameStop's market capitalization was roughly $11 billion at the time of the news, while eBay's stood at about $46 billion. Analysts are questioning whether eBay's board will view GameStop, whose market value was $12 billion, as a credible acquirer for a company 4 times its size. To bolster its case, GameStop has proposed aggressive cost-cutting measures, targeting $2 billion in annual expenses within a year, specifically targeting eBay's $2.4 billion sales and marketing budget, citing flat net active buyer growth. The company projects these cuts could boost eBay's earnings per share significantly. Furthermore, GameStop plans to leverage its roughly 1,600 U.S. retail stores as physical infrastructure for eBay's marketplace, offering capabilities in authentication, fulfillment, and live commerce. Cohen has indicated a willingness to pursue a proxy fight with eBay shareholders if necessary. Should the deal materialize, Cohen is expected to become the CEO of the combined company. The bid is framed by Cohen as a strategic move to reposition eBay as the Amazon of the gaming industry, building on his earlier commentary about the potential for the e-commerce platform to become a major player.